Hello. Thank you everyone for joining us today. We just ran into some technical difficulties. So apologies for the delay here. Just having some Zoom issues, as I'm sure everyone here can relate to in this, from probably most of you, remote work life. So like I said, thanks for hanging in with us, and sorry for the delay again. We can jump right into it today, though. So, thank you all for joining us for our 1 hour webinar of performing anti fraud audits in purchasing and accounts payable. I'm Sam Maxwell, part of the marketing team here at MHC, and I'll be facilitating today's discussion. Our speaker is Marna Steuart, who I'll introduce shortly. First, I'd just like to go over some housekeeping items. This webinar is being recorded, and attendees will receive a follow-up email with the link to the recording on our website. All participants are muted to prevent background noise, so please type in any questions you may have into the Q&A section. All webinars, and then actually exciting news, all MHC webinars moving forward will be approved via IOFM. So all attendees will be receiving one continuing education credit, and that certification will be sent out 1 day after the webinar. So starting today and then moving forward, like I said, MHC will be certified via IOFM to provide you all with that continuing education credit. There will also be a post-webinar survey that will appear when the webinar ends. We love to see the results of this survey just to see how we're doing. And if you guys have any needs for additional information, we can follow up with you that way. Awesome. Let me just pull up the slide deck here for everyone. Sorry, like I said, we were going through technical difficulties. Great. Okay. Sharing my screen and share. Awesome. Great. So yeah, just quickly before I hand this off to Marna, apologies. Let me go back. Yeah, so I'll hand it off to Marna now.
Thank you so much, Ben. Welcome, everybody. Likely part of the technical issues are just me and Zoom. We don't get along too well, but in any case, I'm glad you're all here. I enjoy teaching this subject matter and have been involved, in the business world for over 30 years now. So I do have quite a bit of experience, and I'll be teaching from that today. So as you can switch the slide for me, please, to the agenda. That's the third slide in.
Yes. Yep, we're on it.
And this will just sort of give you a short idea of what we're talking about today. So I'll spend some time on the fraud triangle. And just know that I teach from one of my licenses, but really all of them. But I am a CFE, which is Certified Fraud Examiner. And the Association of Certified Fraud Examiners is a wonderful resource for everyone in the audit realm or in accounting in general. And I urge everyone, if you're at all interested in sort of the fraud sector, to go forward and get that license, because it's really interesting to learn about the mind of a thief and just how to sort of manage that in your roles at your organizations. So we'll talk about the fraud triangle. And then we'll get kind of a basic understanding of fraud and the different types of fraud that can occur. This will give us a good foundation to sort of move on and talk about, good controls over accounts payable. And then we'll get into some real life type audits and analysis that I've done and performed in my career. So the fun stuff and just sort of how to go about that and manage that within your organization if you're tasked with doing these types of projects, for the most part, is what I would call them. So my background comes from being in a large internal audit, department for a large utility here in town. And so, given the largeness of the organization, we had the resources to kind of go through and do some of these tests that we'll be going through and talking about today. So that's what's on hand. And if you could move to slide 5, I think it is.
Yes. Awesome. We actually have a poll question now.
I think
I'm
that
just going
poll
to
question
switch
is
back
too
for
soon
everyone.
though, because I haven't talked about the types of
Okay.
fraud. So if
Got
we
it.
could hold
Okay.
off on that until I'll let you know when to pull it out. How about that? Or if you want to test people before we get started, that's fine too. Yeah, so the first polling question is, what are the 3 types of fraud? And since we haven't talked about really anything, you may already know. So just from your knowledge base, think about what that is, and I will give you the answers. The first type of fraud is asset misappropriation. The second type of fraud is corruption schemes. And the third type of fraud is financial statement fraud. So those are the 3 types of fraud. And we will talk in depth regarding those. So if you could please, I think okay, anyway, accounts payable controls. We'll get into this right away. So the way that I think about anything in an organization is sort of the inflow and outflow of money. So whenever you're thinking about controls and such, you should always start with that thought process. And how is money coming into our organization and how is it going out? And accounts payable is the main department that handles outgoing funds. So some of the things that come to mind right away for me when I think of accounts payable and the types of fraud that I've seen occur is having a good clean vendor file. This is a very important control. And here's why: because people can create shell companies, which are companies that organizations don't use, but you can fraudulently send money to them. So having good controls over the vendor file is very important. So having duplicate vendors, things like that. I recommend to folks to always at least look at your vendor file once a year and clean it up. Inactivate vendors you're not using. For me and my current organization, we add vendors all the time because I work at a museum, and so things change all the time. We have new exhibits, we have new people we're paying. So for us, it's really imperative to keep it clean because it changes year over year. And you don't want to have excess vendors out there that could just lend itself to paying the wrong vendor. If it's not nefarious, it's just paying the wrong people. So that's an important control. Also having a proper spend authority, which is basically, given your role in the company, it lends itself to how much you can spend on behalf of the company. So a lot of large organizations have a purchase order, invoice match. I haven't used that in a really long time though, probably since I've been at the utility, because it's generally used for large organizations, but smaller organizations can use them too. It just, a lot of organizations don't use purchase order system anymore. So that being said, you want the responsible people to be spending the amounts that they've budgeted for their departments. So just monitoring the levels. So I don't know how your organizations are set up, but vice president all the way down to junior staff, they should have a spending limit. And it should be monitored. And if they are spending above their limit, they should be getting approval from their supervisors in order to spend that money. It's just another control to make sure businesses are spending company money wisely. And then the third bullet here is ensuring you have a valid invoice. Okay, so when I first started in accounting, that was never an issue. But as we know, the world changes all the time. And so, we have nefarious people submitting nefarious invoices, which, you have to have a company set up in order to do that, which is the shell company piece I talked about in the first bullet. But then, people could social engineer now. So they can get into your email and they can pretend to be one of your vendors and they can send you an invoice and have you pay that. Now, the key to that is they would have to change the ACH information, which is automated clearinghouse, which is just, the fancy term for wire transferring funds to a vendor, basically through your bank. But the way they do that is they can social engineer and say, our ACH information has changed. And this has actually happened to me in my past organization. Somebody did that to us. And so we implemented a control whereby we pick up the telephone and actually call that vendor to make sure that it's valid, that they're changing their ACH information. And that's all it takes, is just physically getting a hold of somebody at that company and validating that that information has changed. These types of frauds happen all the time because people don't do that. So just remember that you want to actually get a hold of somebody if they change their banking information that you're paying out to verify that. That's a really key control in this environment that we're in today. The fourth bullet is talking about ensuring you have valid payment information from checks to ACH to wires, which is sort of I led into that with the last bullet point, but really making sure that you're validating with the vendor when that stuff changes, or if you're implementing ACH, because believe it or not, right now we write checks at the museum, and I would like to get away from that, but it's kind of a challenge with the bank and things like that. So in any case, you don't want to write checks because it's very costly. It costs my time. It costs people's time to sign it. It's just if you do cost accounting on writing checks, it's not good in this day and age. So in any case, that means you got to watch all this ACH numbers that are going around for people's businesses and when they change. So, and then the last one is just making sure you have proper authorization to pay. And I chase this down all the time in my organization, and making sure that it's been properly authorized by the proper people. So it goes back to the spend authority. And I'll send them back. You don't have the proper authorization for this payment. Please get your supervisor's approval. So it just goes back to budgeting. People set up their budget. They need to monitor that they're spending their money according to that budget. And so you want the proper people to be authorizing the spend on that budget. So that is my spiel for accounts payable controls. And so now we'll move into some of the interesting factoids I like to spend some time on. And this first slide here talks about the fraud triangle. So the source of this is the ACFE, which I spoke to you about earlier. And what this represents is just why somebody commits fraud. And so, we'll start at the corner on attitudes and rationalization. So, excuse me 1 second here as I get to my place. Yeah. So the first step in kind of understanding, fraud is understanding the three conditions that generally present themselves. And so the triangle itself is just a visualization to try to help people understand why someone would or could commit fraud. So in most cases of fraud, all three of these corners will be in place. So I'm going to start on attitudes and rationalization. So the best way to describe this is to ask you all to think about your habits regarding obeying speed limit. Do you follow the posted sign limits? I know that sometimes I don't even think about it or rationalize why I could go a little faster. I'm just sort of keeping up, with the pace of the cars on the road. But this is an example of how a person can rationalize not following a rule, a policy or procedure, or in this case, a law. So it happens all the time. And it basically provides a reason to perpetrate fraud. And then the second corner on the bottom of the triangle is opportunity. And opportunity in internal audit terms just means a lack of internal controls. So is there a way around the current policies and procedures or day-to-day controls that would allow an individual to commit a fraud? And the last, and really the tipping point in all fraud cases, is the pressure and incentives at the top. And these are things like, basically, do I have a reason to submit a fraudulent expense report, for example? Do I have bills that exceed my wages? Do I have a child with significant medical costs? Do I deserve to just live an extravagant lifestyle? It's a justification for fraud, a fraudulent action. And I've studied a lot of fraud cases, and some of them are just somebody they had the opportunity to do it, and so they did it. So it could be anything. But all the examples that I presented to you, I have had experience with folks saying that, for example, they have a child with significant medical costs, and so they were perpetrating fraud. So this is real life. So that's it for really the fraud triangle. So if we can move on to the next slide. I'd like to present this report to the nation. So basically the ECFE polls all the CFEs out there across the world on an annual basis and asks them to come back and tell them if they've worked on any type of fraud case. And I've submitted several of these over the years that I've worked on them. And so this is really a compilation of what's actually happening out there, which is kind of scary. But so I leave the old information in here just because I like to look. It doesn't change much over the years in terms of the percentages that are occurring in these three different categories of fraud. So asset misappropriation accounts for generally about 85% of frauds across the world. And the median loss is $130,000. So examples of asset misappropriation are theft of assets, time and expense, and billing schemes. So this would kind of fall under the category of like AP and procurement fraud. So most of the frauds occur here. And then the second type of fraud is corruption schemes, which relates to 37%, and the median loss there is $200,000. Examples of those include conflicts of interest, bribery, and improper gratuities. And I will just tell you that this is the hardest type of fraud to catch, because it's usually, somebody pulling a suitcase of cash out of the back of their car, and so you have to be there in that moment, and that's hard to catch. So but people do work on those types of frauds 37% of the time. So, and then the third and final type of fraud is the financial statement fraudulent financial statements. And that accounts for about 9% of frauds. But the median loss there is $1 million. So there's a larger scale type of frauds there. And you can kind of figure out why. I mean, these are high-level finance people that are committing these types of frauds. So they know the ins and outs of the controls and, if they're going to get caught or not. And likely some of them are people running the company. So examples of this include fictitious revenues, improper valuation, and concealed liabilities. Now, you've probably been around for a while and heard of Sarbanes-Oxley. That was implemented to sort of deter this fraudulent financial statement fraud. But you can pull a lot of people that were around during that time, and they'll tell you that doing all those controls may not have really affected too much, because it's always the high level people that are pulling these frauds off. So on that note, we can move on to the next slide. These are just really interesting bits of information that you can find. You can go to the ACFE website and get the report to the nations. I'm holding the 2020 version in my lap right now, just kind of verifying that the percentages that I just read to you are pretty much the same. They don't change from year to year. And like I said, we're polling these folks every year. So people are working on the same types of frauds all the time. But this just shows the cost of occupational fraud. So one metric that can be effectively measured and used to analyze the cost of fraud is the amount of financial damage caused by individual instances of known fraud. So in this instance of 1,483 cases in their study, 1,445 included information about the total dollar amount lost to fraud. For those, the median loss was 145,000. So additionally, over the last 3 studies, the dollar losses of cases analyzed have followed a relatively distinct pattern, with just over half causing losses under 200,000 and more than 1/5 involving losses of at least $1 million. So we're just kind of trying to tell you about the different statistics that they're using for these slides. And then the next slide shows how occupational fraud is committed. So of the 3 primary categories of occupational fraud, asset misappropriation is by far the most common, occurring in more than 85% of cases analyzed for this report. But there they say, the median loss is just 130,000. In contrast to like financial statement fraud, where 9% of the cases end up in a median loss of $1 million. And then corruption tends to fall in the middle of the two of them in terms of both frequency and median loss. Now the next slide shows the duration of fraud schemes, which I like to show because the median duration is the amount of time from when the fraud commenced until it was detected. And for all the schemes in their study, it was 18 months. So that's a long time to have, somebody perpetrating fraud in your organization without catching it. So the median duration of schemes ranged from 12 months for non-cash appropriations to 26 months for check tampering. Interestingly, although non-cash misappropriations were detected the most quickly of all categories, they also had one of the highest median losses of the asset misappropriation categories, indicating that these schemes can cause a large amount of financial damage rather quickly. So again, you can, get a hold of that report to the nation. I believe it's free to everybody, so you don't even have to be a member, I don't think, to get a copy of that. But I urge you all to take a look so that you're well aware of kind of what's happening out there in terms of fraud. Okay, let's move on to sort of some of the meat of this this presentation today. So it's important, first off, to meet with the accounts payable organization that is responsible for processing the data that you want to analyze. So they're usually professionals in this area and have probably seen a lot of things throughout their own careers. So it's nice to have those conversations with those folks, because they're in charge of sort of keeping this stuff from happening. It's helpful to sit down with them and understand the data fields they have access to. So I'm coming at this from sort of an audit lens, if you will, so I'm coming from my experience, and this is what I would do if I was going to do sort of a data analysis in accounts payable. So you want to sit down and kind of record the fields that you have in the accounts payable data. So a typical accounts payable report will most likely have invoice number, invoice amount, data invoice, amount of invoice, vendor name, amount paid, and it could contain any multitude of identifiers, such as the address to which the invoice was generally paid. It's separate from the vendor file. So the vendor file will generally contain the vendor name, address, and any multitude of data regarding the identification of the vendor. So in the purchasing realm, you will likely have access to upfront purchasing files where authorizations are obtained to even be able to purchase items. So these types of reports will likely include such fields as date of request, requester ID or employee ID, amount requested, approved by employee ID, date of authorization, etc. And that's where you would have like a purchase order type of system, is what I'm referring to here. And then the last type of report that you can analyze in AP and in the procurement area is the P card and expense reporting type of reports. We'll talk about how you can perform certain audit tests of each in the upcoming slides. So the point here is to understand the key fields of data and how you can analyze each report, both individually and when joined with one another. Account organizations will vary on who will be able to provide you with reports. So where I came from, accounts payable or procurement business area had dedicated staff that was able to extract reports and provide them to me. And other organizations, it may be IT that you're dealing with. Obviously, it will require a different communication skill set when working with either of these areas. I've found that the keeper of the data is usually pretty competent, but it can require some education to talk them into providing internal audit or whoever you're performing the analysis into allowing you access to the data. It may need to start with a conversation between the higher ups, depending on how large your organization is. But there may be a significant number of fields within your data, and it may not be possible, or IT may not be willing to put in the extra effort to not include certain fields in your population. It's important to understand how each item links with other reports and or how the data can be analyzed. So for example, if you don't utilize the field vendor ID, will it be possible to analyze the data using vendor name? Maybe, but probably not. Most organizations that I've worked with have duplicate vendors. And this is due to system constraints. In that, for example, one vendor may have numerous remit to addresses based on where the work is performed. It depends, again, on the size of your organization, the number of vendors you're dealing with, and the size of the vendor itself. So for each report that you're planning on utilizing for your analysis, I recommend sitting down and brainstorming with the business area and or just by yourself or with colleagues on how you can sort, join, and analyze the data for certain risk concerns. Of course, for AP data, one of the first risks and usually easiest to identify is duplicate invoices. This is one of the easiest areas to set up continuous monitoring on with little required effort. So we haven't talked about the different tools that are out there, but there are some audit tools that you can use, but depending on whether or not you utilize specialized audit software like IDEA or ACL, or I always use like ACL with Excel. There are ways to sort the data by invoice number and amount to search for duplicates. You can just do that in Excel. Other simple tests that we will talk about in more detail are joining the employee master file, for example, with the vendor file and search for shell companies. And I'll just interject here that in my career, most people who perpetrate fraud are not the brightest individuals that I come across. So it's quite easy to catch people trying to do this stuff. And then the business area manager, you and or a colleague may come up with other ways to analyze the data just by simply brainstorming. I find these sessions very worthwhile and interesting. And then sometimes after requesting large volumes of data, sorting it, analyzing, and reviewing the results, You may not find any anomalies. I would be surprised if it is your first time, but if you incorporate these tests into continuous monitoring, you may find that the data yields very little or no data to further research. That's always fine, but document your test steps so that you or another staff member can recreate the testing steps involved in performing the audit tests. And just a note, on using certain audit tools like ACL, the benefit of using that is that you're testing the entire population. So I will just say that the feeling that you get from doing that and not finding any anomalies is really kind of a good feeling, because you've tested the entire population of data. So instead of doing samples. Okay, and then we'll move on to the next slide and talk about some of these tools that are out there. So all these different data analysis tools can be considered what we used to call computer-assisted audit techniques, or CATs. So CATs is the practice of using computers to automate audit processes. It normally includes using basic office productivity software such as spreadsheets, or word processors and test editing programs. And more advanced, software packages involve use of statistical analysis and business intelligence tools. As we move into AI, this stuff will probably become even better in the future. But these tools also include more dedicated, specialized software like ACL and IDEA. I've never used IDEA, but I have used ACL quite a bit. And I just quote the two because they were the most popular to my knowledge as an auditor, but I'm sure there are others out there now. And you all may be more familiar with how they work. But I started out with ACL, and when I started using it, it was like another programming language. But over the years, they've gotten a lot better. And if you do purchase it, I would always recommend getting the support, because their support team is really good and sort of walking you through some of the quick tests that you can do. And I haven't used IDEA, but I've been told by numerous colleagues that it's very user friendly. And this course really isn't, supposed to provide you with ideas on tools, but I'll just tell you what I've used in my experience, and that's ACL. And like I said, it just gives you and management the knowledge that you've tested 100% of the population and identified 100% of the exceptions, rather than just random sampling. But some other additional benefits of audit software include they're independent of the system being audited, and will use a read-only copy of the file to avoid any corruption of an organization's data. That's one thing that IT was always afraid of, that we would mess with the data. Many audit-specific routines are used, such as sampling, and it provides documentation of each test performed in the software that can be used as documentation in the auditor's work papers, as well as documentation for continuous monitoring. So all of those are good things to have in large organizations where you're performing these type of tests. Okay, and then if we move on to the next slide, we'll get to some more information on these tools. The data can be queried by authoring filters in ACL or IDEA. Stratification is the process of dividing members of the population into homogeneous subgroups before sampling. The strata should be mutually exclusive. Every element in the population must be assigned to only one stratum, and no population element can be excluded. And this is about all the statistics I care to discuss, and about the extent of my knowledge. So I'll just tell you that was not my favorite subject in college, but I still was able to perform these tests. It's built into the software, which is nice. And sample extractions can be statistically selected via filters again. Then I have listed here missing sequence ID. It's simply the gap analysis function with an ACL or IDEA. It allows you to find gaps in sequences of numbers, and it can come in handy in AP when you notice a vendor that doesn't have gaps in invoice numbers. For example, that can indicate a shell company because they're only submitting invoices to you. Again, there are underlying statistical analysis that these software programs allow one to perform on large data sets. You can also create pivot tables in ACL. I'm not sure about IDEA, but I'm sure it has its own function that can create pivot tables. And then sort the data in ACL, and then I usually would create pivot tables in Excel. So you kind of use those tools to sort of pull the data and then download it into Excel, which most people are more familiar with, and then you can kind of clean the data that way or set it up and sort it the way you want to analyze it. And then finally listed here is cross-tabulation in a statistical process that summarizes categorical data to create a contingency table. They're heavily used in survey research, business intelligence, engineering, and scientific research. It's a table in a matrix format that displays the frequency distribution of variables. So that's kind of what the specialized software can help you with, providing that. And so as we move on to the next slide, let's start to talk about some examples of proactive, what we called anti-fraud reviews. So these are all things that I've done. I've done shell company audits where I've reviewed the employee master file against the vendor master file, and it's really just matching data fields. So I would match, I think, the address field in the vendor file to the employee master file. And then duplicate invoices, which we'll go over. Invoice testing using Benford's law on accounts payable file. We'll talk about that. And then duplicate vendors on the vendor master file. I put payroll in here. I think I was just sort of talking about, if we have time, we can talk about it, but it's just other ways to use ACL in other areas. And then finally, expense report testing. We'll talk about reviewing for duplicate transactions and false transactions, mileage reimbursements, etc. So in a typical shell company audit, you are looking for any fields, for example, in the employee master file, such as name, address, phone number, account numbers, if they receive direct deposit, that this file has that you can join. So with any fields that may exist in the vendor master file. So when you're joining fields, it's just going to show you when one shows up in the other report. So you can imagine if you're joining the employee master with a vendor master, you might have them because people submit expense reports, but you'll have to, kind of run through that data and make sure that that's the case and that the address is not attached to another company instead of that person. Okay, and as we move on to the next slide, shell companies, I spend a lot of time on this because it happens a lot. Analysis that can be performed, look for shell companies. We'll talk about that next slide, but a definition of a shell company is a company that serves as a vehicle for business transactions without itself having any significant assets or operations. They're not in themselves illegal, and they do have legitimate business purposes. I think it's for tax purposes, but again, probably nefarious, like they're trying to hide their assets from the IRS. The way I would define it for this purpose is that it's a company created by an employee to steal money from the company that employs them. So I have yet to really hear about a shell company that's on a positive note. In any case, the next slide, we'll kind of start talking about, this is just a spreadsheet that shows kind of how I performed this, combining, I think, well, I'll just read through this for you. In a typical shell company audit, you're looking for any fields, for example, in the employee master, such as name, address, phone number, account numbers, if they receive direct deposit, that this file has that you can join with any of the fields that may exist in the vendor master file. So you're really looking for matches by joining certain fields within the files. I suggest joining any field that is similar in each file. Now, I'm most familiar with ACL, as I mentioned, but so I'm not going to teach you how to scrub the data and get it ready for ACL or IDEA, but I leave that to the experts. But based on my experience, that, for example, on the phone number, all other characters besides the number should be scrubbed from the files. So there are certain things that you have to do like that in order to join the fields. I think it's fairly simple to do, though, in both software systems. I know in ACL, the fields that you are joining must also be the same length. So the joining of the files should produce instant results, although there may be some false positives that need to be scrubbed out. And the one example I gave you was, if people get expense reports, then their address and information might match to the employee master. So a real life story for you. When I performed this type of join during an anti-fraud audit at my former employer, I got a hit on the address field. And sure enough, there was an employee that had the same address as a vendor. Through further research, I uncovered that an employee's son formed his own company with his home address. The father and his then supervisor got the vendor approved. To this day, I don't know how that vendor got approved in the vendor master file. The supervisor claimed he did not know it was his employee's son's company. I'm not sure I believe that individual. The son then reported up through his father and submitted invoices that were in turn approved by his father. Conflict of interest? I don't know. I had an investigative interview with that employee and determined, that he was guilty of setting up what I would call a shell company. Now, the son only worked for the company and had formed his own company to do so. It wasn't nefarious, but I had to explain to the employee, basically another way I could have found this was to run a sort on the invoice file. The invoice file is something you can request from AP or IT that is a series of invoices that have been paid over the course of a selected time period, say 2 years or so. And then if you sort this by vendor, by invoice number, I could have found consecutive invoices under the same vendor as the company was his only customer. I remember having a conversation with the father and saying, basically, it was around Thanksgiving. And I said, well, what would stop your son from, submitting an invoice for your Thanksgiving turkey? To which that was met with silence. But you can see that this stuff happens. So just be aware of it and try to educate people on why it's wrong if they meet you with silence. Okay, in the next case, the next slide was I was just reading the Sunday paper about a month ago, and I know, well, I guess you guys can see that it's older now, but I found this article, which I'll read to you because you probably can't see it, but it says former Celestial Seasonings worker sentenced for theft. This is out of Boulder, a suburb of Denver, which you may or may not have heard of, but this is my hometown. So Celestial Seasonings makes tea. Hopefully you're familiar with their products. If not, they have a wonderful variety of herbal teas, and they've been around since 1970. They currently account for about 100 million in sales in the United States annually. And the article says the following: a former Celestial Seasonings distribution manager accused of embezzling more than 1.8 million from the Boulder-based tea company has been sentenced to 10 years in prison. Jeffrey Michael Wagner, 43, about the age of the company at the time, was sentenced Friday. He pled guilty in March to forgery and theft of more than $20,000. Investigators say Wagner, who worked at the company from 2006 till June of 2012, created a fake vendor and began authorizing invoices to the fictitious company. Court records say the bogus company listed Wagner's cell phone number as contact information, and the bank routing number matched that of his personal account where Celestial Seasonings deposited his paychecks. As distribution manager, Wagner could approve new vendor applications and invoices less than $20,000. Well, you can just year from me reading that article, there are some issues with controls. Now, I don't know all the details of this case, but in just reading the article, a good auditor can tell where the control gaps were, right? In the last sentence of the article, right? Just because the invoices were less than $20,000, no employee should ever have the ability to approve a new vendor and approve invoices. It's a segregation of duties issue. And I can't believe that the company allowed this practice to go on. So I don't know how it was found, but if you're in internal audit, you know that if they found it, it's a good thing, but it's also not a good thing that was happening. So in any case, one other point I'd like to make is that this went on for 6 years. So I have no idea how the company found it again, but if the audit department had performed a shell company audit and joined the phone number field on the employee master file with the employee number field in the vendor file, I guarantee you, with the tidbits provided in this article, this fictitious vendor would have been detected and $1.8 million in lost revenues could have been avoided. So I don't know about you, but that's a lot of money. Okay, so that's the one that I found in the paper. This lovely file just shows you how I did a duplicates review, and it's an Excel spreadsheet that I dumped out of the information out of ACL. So all the highlighted items are things that I needed to review because it resulted in what looked like a duplicate. I think it's important to note here that in any anti-fraud audit you choose in the AP and procurement area, make sure you build in some time to dedicate to understanding the data files and how you can analyze them for anomalies. It does take a time, and a lot of it, the software tools try to make it easier to hone in on the anomalies, but you're the one that has to dig deeper on what looks like it might need further investigation. So I found myself dumping queries from ACL into Excel and manipulating the results easier. I like the software tools because it allows you to analyze the entire population while weeding out the transactions that need to be analyzed. So searching for duplicates is a very easy test to perform on the invoice data file, but it can take on many different forms, as illustrated in this spreadsheet, which was a dump out of ACL. And it was set to find duplicates based on invoice number, date, and amount. So to give a bit of background, the invoice file included reimbursements to employees for items submitted on their expense reports. So the first column is vendor code. And as you can see, or try to see, there are several different vendor codes, but they do have duplicate amounts on the same date and invoice number. So this would be the same because the invoice number for expense reports was simply the date of the expense a lot. This allowed me to dig deeper to see if employees attended the same training at the same cost or looking for duplicates of mileage or other expenditures. From here, I would have to review the underlying expense reports to see what was going on. And I actually did that. So it is a long, arduous process. Duplicates can also be tested on the vendor master file for duplicate vendors. This can be done on vendor code and or vendor name. We'll talk about this later on, but duplicate invoices can be tested for in the invoice file. This is the most common area to find cost savings for a company. In some cases, invoices are faxed in and processed after already being processed through the regular invoice payment process. That's a dated comment, but if you're using a fax machine, the IRS still uses a fax machine. But emails and such, there are other ways to duplicate invoices. It happens a lot. It still happens to me. So we're trying to keep that process from where we're inadvertently paying people twice. It's an area that needs to be looked at, as most of us would hope that our vendors would alert us to this happening. You'd be surprised, or maybe you wouldn't, if your healthy skepticism is in place. You can also look for duplicate employees in the employee master file and our payroll master file. There are a whole lot of different places where searching for duplicates can uncover anomalies. So testing for duplicates is very straightforward in both ACL and IDEA, and it's pretty quick. So there's an actual command key for duplicates. Okay, and the next slide, talk a little bit about Benford's Law. I just like talking about this because it's a statistic that's built into ACL. It's also called the first digit law. And it refers to the frequency distribution of digits in many, but not all real life sources of data. So in this distribution, the number 1 occurs as a leading digit about 30% of the time, while larger numbers occur in that position less frequently. So 9 as the first digit shows up less than 5% of the time. Benford's law also concerns the expected distribution for digits beyond the first, which approach a uniform distribution. So the result has been found to apply to a wide variety of data sets, including electricity bills, street addresses, stock prices, population numbers, death rates, lengths of rivers, physical and mathematical constants, and processes described by power laws, which are very common in nature. So it tends to be the most accurate when values are distributed across multiple orders of magnitude. Now in ACL, you can run Benford's law against your invoice file, for example, to find any anomalies as they relate to the statistical measure. So if you have a multitude of transactions, for example, that have a leading number of 9, this would go against the law, and less than 5% of the time, the leading digit is 9. And that should be investigated further. So you can download the data into Excel and sort on the amount and review the transactions with a leading number of 9, and you might be surprised at what you find. I like to talk about this one because a lot of approval limits are marked at the $1,000 level. So for example, junior staff might have $1,000 spending authority, or managers might have 10,000 or 100,000 or $1 million. So I think Benford's law comes in handy because, as I mentioned earlier, most thieves are not that smart. They're usually going to pick a number right below that, which is probably $999 or $999,000. So Benford's law really does come in handy if your authorization limits are cut off at $1,000 marks. So just keep that in mind. As we move on to the next slide, duplicate vendors on the vendor master file. So at my company, the vendor file was huge, and it contained vendors where we did business in multiple states. So that became somewhat of a challenge to maintain an accurate vendor file. So first of all, you should make sure your company has strict policies and procedures mandating the maintenance of all of the vendor master file. And by all means, as we saw in the example at Celestial Seasonings, make sure that the employees responsible for maintaining the vendor file do not have access to approving invoices. Let me say that again. Make sure that the employees responsible for maintaining the vendor file do not have access to approving invoices. If this is the case in your company, put a stop to it. It's a huge control gap. The vendor file, to continue with my real life example, was maintained with multiple of the same vendor by having a different vendor code for each one. And any and all duplicates found on the vendor master should be tracked and reviewed with accounts payable management. This can also be tested on the invoice file duplicates. So what I mean by say for example, you have a large utility. So my utility covered Colorado and also covered Minnesota and Wisconsin. And so we had, customers in both areas of the country. So if we were a vendor, for example, our vendor code might change in Wisconsin. It might be a W, XCLE or EL. And then, in Minnesota, it could be M, XCEL, or Colorado could be C. So those different vendor IDs would indicate in which state that vendor was operating. So that's what I mean by having duplicate vendors. It's the same vendor, but they're operating in different states, basically. Okay, then I would research it to ensure that the invoice didn't get paid to two different billing addresses of the same vendor, for example. So you can test that with your data as well. Please also make sure there's a way to make inactive vendors that aren't being utilized by the company at any given time. Make sure there's a policy to delete inactive vendors after a certain amount of time. In addition, review of the policies and procedures for adding new vendors should be considered at the time of this audit. And ensure that adequate authorization is given and that managers aren't just blindly authorizing new vendors at the request of their employees. Any inactive vendors that are reactivated or newly added vendors without adequate authorization should be indicators of possible shell company activity. One thing I didn't mention that comes up a lot in my current company is a W-9. We do not pay any vendor without that W-9. And I recommend that that's a policy in your company. Doesn't matter if they're not required to have a W-9. That's the form that you get when you're sending a 1099 to a company, but you can request it from all companies. And I would recommend that because it's another process that ensures that you're getting information from the vendor directly and setting them up accurately within your vendor master file. Okay, real quick as we move on to the next slide. Oh, how much
Hey,
time?
Marna, I was just gonna say we just hit the top of the hour.
Okay,
So we
awesome.
did hit our
Yeah,
time here, but I just wanted to give you a moment just to kind of give your final thoughts here. That's
yeah,
one for joining us. So I figured now would be a good
sure,
time
sure,
to
sure.
your
No,
final.
yeah, there's tons of information in this presentation, but we hit the highlights, I think, of AP. So that's the good news. And uh, if we go back to, kind of that second slide, I would just sort of reiterate the AP controls that you want to make sure are in place. And that is just how I would kind of wrap things up here.
Got it. Yep.
2, 5, yeah. So if we go back to slide 5,
Hmm.
the controls that you all should make sure you have in place is making sure that your vendor files are clean. Having this proper spend authorities within your companies, given the level of the employee, ensuring that you have a valid invoice, and making sure that if you're changing ACH information, which is your banking routing number and account number, that you verify directly with that company person on the telephone, not via email. And then finally, you're making sure that you have proper authorization to pay. So those are the highlights for AP. And I thank you for your attention today. And hopefully you learned something. If anything, it was interesting in the fraud realm.
Yeah.
So thank you.
Yeah, great. Well, awesome. We just want to thank you, Marna, for this awesome presentation. I'm already getting questions about sending out the deck. So we can definitely work on getting a deck out to everyone since we didn't get to cover all the information. So you guys will be able to view this presentation. And thank you again, everyone, for joining us. We really appreciate your time. And like I said, tomorrow you will be receiving your continuing education credits. And stay in touch for MHC's upcoming webinars. So thank you, everyone, and thanks, Marna, again.
You bet. Take care, everyone.
Okay, bye.
Bye-bye.